The first atomic bomb was dropped on Hiroshima.
Only humanity!
The fires of frustration and discord are burning in every
Let us
city.
not forget for a moment the toils and effort that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
So it's March, which means two things are certain. First, everyone suddenly becomes a college basketball expert this time of year because March Madness invites everyone to predict the next 3 weeks as if we've all been quietly running a scouting department on the side. I don't know about you, but got some other things going on. And number two, everybody's perfect 2026 bracket will likely be in ashes by sometime Thursday afternoon. Now, what I love about this time of year is how familiar the pattern is. Sports fans will pore over the seedings. They'll convince themselves that they've spotted the sleeper that nobody else sees. And then some school they've barely heard of is going to knock them out in the first round. Investing isn't all that different. Right now, the economic scoreboard looks pretty mixed. Growth has cooled from earlier in the cycle, and some parts of the economy feel downright sluggish, while others are quietly playing some pretty solid ball. Consistent, maybe not highlight reel material. The mistake, both in brackets and with portfolios, is thinking you have to hit every single pick. In March Madness, that's going to show up as too many wild upsets in your bracket, or way too much confidence in a single storyline. And in investing, it shows up as big portfolio changes after one disappointing headline, or going all in on a current number one seed as a sector or stock. But here's the thing. The champion isn't crowned after the first weekend, and your retirement doesn't live or die on a single economic report or statistic. Good investors build a bracket that can survive a few surprises. They've got a diversified mix of holdings. They have a strategy that assumes some favorites are going to stumble. They have a time horizon that's measured in seasons, not games, minutes, or seconds. So as you're filling out that 2026 bracket, let it be a reminder. With your money, you don't need the perfect call. But you do need a game plan that's sturdy enough to keep you in the tournament long after this year's brackets are in the shredder. After the break, I'm back with this week's history lesson for the modern investor.
This episode is sponsored by Victory Independent Planning. At VIP, our mission is simple. Live well, do good. We build strong relationships with good people and help them turn money into what really matters. Retiring without worry, traveling more, supporting family, or funding the causes and projects they care about most. Based in Naples, Florida, and Portland, Oregon, we serve clients nationwide with comprehensive fiduciary advice, retirement income planning, custom investment portfolios, tax strategy, healthcare and Medicare decisions, and estate and legacy planning, all carefully organized around your unique goals. If you're ready for a plan that puts your best interests first, visit victoryindependentplanning.com and schedule your VIP consultation.
On March 18th, 1990, the Boston Heist. That's when security by illusion met real-world risks. In the early hours of March 18th, 1990, two men dressed as Boston police officers rang the buzzer at the Isabella Stewart Gardner Museum.
This is the police! Open
It
up!
was St. Patrick's Day night. City was full of parties, and the guards on duty weren't expecting much more than the usual quiet shift. These police officers said they were responding to a disturbance, and they needed entrance to the building. The guards broke protocol. They let them in and were quickly handcuffed, duct taped, and led to the basement. Over the next 81 minutes, the thieves moved calmly through the galleries, cutting masterpieces out of their frames. Works by Rembrandt, Vermeer, Degas, and others disappeared into the night, an estimated $500 million worth of art, never to be recovered. The empty frames still hang on the walls today, a haunting reminder that what looked like a secure, prestigious institution had gaping vulnerabilities, understaffed security, outdated systems, and a dangerous reliance on a risk policy that sums up to, well, it's never happened before. On paper, the museum had guards, cameras, and procedures. In practice, a somewhat convincing story where the police opened the door overrode all of it. The real loss wasn't just the value of the paintings. It was the permanent hole in a collection that could never be rebuilt. The Gardner heist has since become one of the most famous unsolved art crimes in history, and a case study in how illusions of safety can crumble in just minutes. For investors and retirees, that quiet night in Boston, well, not so quiet being St. Patrick's Day, but that night in Boston holds more than true crime intrigue. It's a vivid picture of how we often treat our own financial museums, valuable assets protected by routines that feel safe until a stress test arrives. Here then are 4 lessons for the modern investor from a night at the museum. First of all, don't mistake appearances for actual protection. The Gardner had guards, cameras, and procedures, sure, but it still lost some of the world's most valuable art. In your financial life, a big account balance, a stack of paper statements, a thick 401k menu can give you a comforting sense of security. But that's not where real protection comes from. Real protection comes from structure, how diversified you are, how your assets are titled, what insurance and legal documents you have in place, and whether you have a plan for taxes, incapacity, and withdrawals. Looking safe and actually being safe are just not the same thing. Second, have clear rules for what gets through the door. The guards broke protocol because the intruders looked and sounded convincing. Investors do something similar when a compelling story about a hot stock, a new product, or a can't-miss sector shows up at their door. Without preset rules and investment policy, position size limits, or due diligence steps, it's easy to make exceptions in the moment. Do me a favor, decide ahead of time what qualifies to be in your gallery, how much you'll allocate to any single idea, what evidence you need, and what's going to stay outside, no matter how persuasive the pitch. Third, some assets are truly irreplaceable, so protect them accordingly. A lost Vermeer is forever. And parts of your financial life fall into that Gardner art category. Your ability to earn an income, your health, your core retirement capital, your family home, and your reputation. Those deserve stronger safeguards. Things like adequate insurance, emergency funds, conservative spending assumptions, and avoidance of leverage or speculation. Know and protect your masterpieces appropriately. Finally, plan for low probability, high impact events. Before 1990, a Hollywood-style art heist probably felt like a movie plot rather than a real risk. Afterwards, it was case law. Financially, we face our own unlikely events as well: job loss, illness, market crashes, policy changes, family crisis. You can't predict the exact form they'll take, but you can plan for the category. That's what emergency savings, diversified portfolios, disability and life insurance, and estate planning are all for. The goal is not to eliminate risk. That's impossible. The goal is to make sure a single breach doesn't empty the whole gallery. Here's my final thought this week. Those empty frames at the Gardner Museum are powerful because they're permanent. They remind us that some mistakes can't simply be papered over or earned back in the next cycle. Your financial life will have its own near misses and small errors, and that is completely normal. But the key is to design your personal museum so that even if someone jostles a frame,
Oops.
the truly priceless pieces are hard to steal or destroy. That means taking security and risk management as serious in quiet times as you would after a headline-grabbing event. In the end, preserving what you already have and what you can't easily replace is as important as acquiring that next great piece of art.